Welcome to the Breakfast Club. My name's Darren, and here we are on the 25th of June, 2024. Let me get my video capture device. There we go. Good morning. All right, let's look at the markets here, and we'll see what we got. So, look at the NASDAQ. Look at it on the daily chart. Oops. Let's get back there again. So, where are we looking today? I'm looking for $19,909 today. 19,919. That's an upside. And then looking for a run back down into this fair value gap below us here. We got relative equal lows. We did take out these lows yesterday. So I'd like to see us come back, retrace to here, and then come down and take out more liquidity down here back into that fair value gap below us. So upside today, reaction, we may even see a nice little wick, and then continuation on the downside today. We'll see how the 10 o'clock. Yeah, we'll see how the news is at 10 o'clock. Is there news this morning? What we got here? So we got 10 o'clock CV Consumer Index or Consumer Confidence this morning, and the Richmond Manufacturing Index at 10 o'clock. So we have some news release. So yeah, I'm looking for upside here. Return back to this order block, fill that imbalance in here. So immediately rebalance this today. And I'd even like to see it dig into 19,966, somewhere in there. And then I'd like to see, let's see what we got here. So looking for these equal highs up here in the E-mini S&P today. Take these equal highs back and get back into this fair value gap, into this breaker right here. I'd like to see us revisit this breaker in S&P at 55.31. At 55.31. upside. Where will we go for downside? And see what we get. Let me just double check that. We got these relative equal lows below us here too. So I like to see us come back into this range by 50% for your fib tool in here, and we'll see what that looks like on the yeah, it puts us right back into that level there. The upside. Got some heartburn going on here. And let's have a look at Dow Jones. Dow's had a reversal off these candles here back into this range. Oof, we got a little bit more upside to go yet. We get a reversal into here. You don't want to see this low also get taken out here. I'd like to see it just come back, find some support inside this fair value gap here. It could come all the way down to here. I don't want to see it refill this. I suppose it could. I'd like to see this stay open as a breakaway and then start coming back up and fill this area here. On the hourly. Okay, yeah, it's more bearish on the downside. So we do get a run up 39.73. What did I was looking at here? 39.73. Yeah, so this could be on the hourly, it's bearish. So if you go through here, take this low, come back into the low, into this candle here, and then go lower. We need to see that. It needs to close below this this candle here. This candle's high. So you're in between this fair value gap and this one right now for upside. And then if you take this to the upside, we're looking for this gap here and upside equal highs in that order. See how this acts in here. This is an important place for it to hold price now. You want to see it continue to the upside. So you're at the mean consequent encroachment of that BISI there. So if we do get a reaction back in here in the next hour or so, 39.97.95, and then see if that mean threshold holds at 39.8. Or see if this consequent encroachment holds price here, or if we're just rolling up here to key off this order block and continue down on the downside. Oil. We're back into this reversal here again. Going higher. I don't see much up here. If we take out the session open on a close and come back into this little gap in here, find some support on that, running for the highs. Like they were going higher. Kind of hard. We're in a premium portion, or at the 50% of that range as it is right now, I bet, right? Yeah. Just over 50% now. I'm looking for it to get through these two, this breaker right here. We can get through this breaker on the downside, on the upside, get support on that. We'd just like to see that go higher. Forex. Look at euro. I'm just looking at the NASDAQ there for a second. I'm long on NASDAQ, so I just want to make sure that I take something off of the rejection block there. Okay, let's look at Forex Euro breaker. Return to breaker. 50% range. We're down into here. Now, ideally, I'd like to see this react off of here and get back up into this order block here. Like that would be the low. But you can't really predict the lows, so we'll see how it holds here for now. And you're looking for the 10 o'clock reversal. That's why you pay yourself at rejection blocks, man. So I'd like to maybe see this get down into this consolidation, get a CAM model entry off of here. Leave this open. CAM model 2 would bring you right back to the session open of yesterday. Well, CAM model 2 will put you just below that, but CAM model 1 will get you right in here. Bottom of this fair value gap. You want to see that hold. If it closes below that, you're looking for your wiggle room is here. And if it closes below 50% of that range, then you're going for the lows. But, you know, I'd like to see it just kind of hold here at the top of that consolidation and leave that open. But ideally, 50% of this range continue higher. You're in a discount range already. So stop would have to go below this low. Actually, I'd have to put mine down in here because if you started closing below here, your stop would get taken anyway. So looking for more upside off of key levels, the bottom of this, top of this, and maximum downside is the session open. And then you're looking for higher prices in euro. So let's look at let's look at British pound. I don't like that. It doesn't show up well on my I'm just going to skip the contract and go to a just the futures. Continuous price. Highs taken here. It's at a spot right now. You could get short from here off this breaker. You've traded below it. You've come back to it. You're looking for downside prices on there now. I'm going to put a short right there. I like that short right there. Put my stop loss up here. Session open. This is just demo trade. I don't want to see it get above here. I want to see it get through here. 50% of that it would take me out. Australian dollar still in the mire, down in the mud. Let's have a look at let's look at Dixie here. Dixie's finding support off of this inversion fair value gap on the daily. You've come back inside. The bodies are still respecting the inside of that, so you're looking for higher prices. Again, looking for a run on the liquidity above yesterday. And Friday's and Thursday's highs. Look for the equilibrium at 105.88. The mean threshold of this candle, which is a breaker. Last up close candle before running out these lows. So I'd like to see that. As you can see, we're hitting off the breaker here and getting a reaction off of it. So if we come back through it one more time, you're looking for the mean threshold at 105.880. I'll put a line in here. That will put more downside pressure on the pound that we're looking for. Get below this candle here. Come back, find support at it. We might see more downside. We're going to return to here. $105.26, and then a continuation to the upside. If we take this low out here, we're looking for a return back into this candle here. But, banks, Bitcoin. So a quick peek at Bitcoin for you. Bitcoin's had a reverse, equal highs, relative equal highs here. The return into this on the daily, or we're on daily here, so we're down into this. I had my little drop box down in there yesterday. I put this box on here last night as a downside objective. And we've gone through that, taken out this. We're still inside this fair value gap here, and we're below this. So I'm thinking we just get a return inside that box and then a continuation on the downside. This candle here being, I guess this would be the candle because that one's inside that one. So breaker. No, that runs here. That's the candle I'm looking for. So we'll see if we get mean threshold of this candle if it holds price on the downside. I want to see, we have taken out these lows. So if we trade today on the close here and tomorrow we start to trade up through this, looking for a run on these highs next. You have a little reversal here. Body runs through this. You don't get an opportunity to get on it again. So you look for this candle to get revisited after it's been taken to the upside. So it's taken right here on a close. This one opens, comes down, it just taps it perfectly right there. You see that? There and there. You tap it and go. You're back into this order block or breaker, taking out this low. Trade back up inside it. Its mean threshold held, then it just slightly gave way here. So you want to see this hold price and continue pushing higher. And if it doesn't, if this, we drop down below this low, come back, find some support at this. If you're looking for continuation back down into this little level, you're inside that range there again. That's Bitcoin as far as I can see it, real quick. And take these with a grain of salt because I'm trying to do a quick 5-minute analysis on them here. Let's have a look at these guys. I'm neutral on soybeans right there on the daily. I'm not going to dig down into the lower time frames, but right now I'm still bearish on soybeans. I don't want to see it get above. It's got to get above this candle here and this candle here for me to start going bullish again. Corn. I'm still bearish on corn. Look for this mean threshold. Looks like we're tagged it already today. So mean threshold, If that gives way, look for further downside, obviously. Sugar. Now, sugar gave us the run up yesterday into that little imbalance again. Overall, I'm still bullish on this, even though it's yeah, I'm still bullish on this, looking for these highs to get taken today. $19.72 maybe. I'll put a line in here so I don't contradict myself for tomorrow when I come back and have a look at this. I want to see if I've been close. That's the upside objective right now for me, for sugar, coffee. That's just back to an order block. Looking for these equal highs above you here. So you're looking for it to tap this and start going higher. So higher prices on coffee today you're looking for. The liquidity sitting there. Oh, look at this. Look at this. What have we been calling in cattle, live cattle for weeks now? Upside objective. Look how close we are now. This last week and a half has been week and a half. We've got the good upside that we've been looking for now. So that's my upside objective in cattle. Today or tomorrow. Cocoa. Still calling down on cocoa. Oh, is it running for the lows now? Oh, there's 730. And what else? We got lumber. We're looking for lumber to hit our number, and lumber hit the number. Now I want to see a reaction off this. Not that I was predicting the lows in lumber, but I'd like to see that kick off of here now and come back into this range. They have an imbalance here. Gap. There's like a void here, and you've got sippy. Return to the breaker. So maybe we get a little pump back up into here. You can get further downside, but right now I'd like to see it react off the level that we're calling for it to come back up into these equal lows here. See what kind of reaction you get there. And lean piggies, looking for a reaction off of here for further downside. We're calling for this yesterday. So far so good. We got to run on those lows. Took that out, so now we're looking for this gap. Keep your eyes on this gap and fair value in here. So 89. I'm going to put a little line there so we're all on the same page there. That's my commodities. We'll call that commodity corner. Welcome to commodity corner. Let's have a look at the gold. Looking at gold. Run on liquidity here. And did we ever get a reaction off that? Nice. So looking to revisit. If we pop through that, keep your eye on this order block here. And then I'm looking for, if we get further upside in gold or in the dollar, I'm looking about here next for gold. Take these lows and just dip into that. Take these lows out here. We got to get through this first though. If we just come down, tap this, you're looking for more upside. And if we take this fair value gap to the upside, then I'm looking for a bigger run back into that range. That's what I got for gold right now. That's that. Let's get back over to our look at pounds. See what pounds giving us here. See, I don't want it to get above this fair value gap here. That's why my stop is really tight. Wicks can do the damage. I don't want to see it clear out the previous hour's high, even though there's a little tiny gap there. Anywhere inside here would be valuable. But my run for liquidity is like what, 2R? Maybe 2R, just under 2R. Not that I don't trade R factors. I don't believe in them. I don't believe in that R1, R2 stuff. Sorry. The algorithm is not based on R factors. You'll see extreme partials. You'll see specific areas, and that's not an exact science in R1 and R2. You always get approximations. Yeah, let's get back into our $9.30 candle here. And let's look at, so looking at these equal lows to get taken now. That's why you pay yourself at rejection blocks. Remember I said I pay myself at that rejection block? Look at that, boom. I tell you, they will pay you more often than these will pay you, obviously, right? Because they come first. But if you're always aiming for those highs, you don't always necessarily get them. So if you're saying you always put your take profit up here and it just comes up to you and always runs away on you, stop loss here, or your take profit here, and then leave a piece on to run that, but always put your safety factor there. Anyway, that's what I believe. So we want to see it take these lows out here. Anywhere inside here, I'd want to see a reversal. If we don't, and we're looking at that daily again, and we're looking for a deeper run down into here, look for the mean threshold of this candle. So in here. I think that's pretty close. I'm just eyeballing it. On the hourly, we can come back in and fill this fair value gap. We're down back to that session open. We fill that fair value gap in here. Tap the breaker. That's the breaker that takes this little high out here. We come back into here. If we close below this mean threshold or the middle of these two candles, then we're looking for a run on the liquidity below the market here and looking to run back down into here. On the hourly, there's a fair value gap below you here, and these equal lows. So are we going to find some support off of this and start pushing higher into the range, which ideally is what I'd be looking for? Take these equal highs out here now. You got like triple highs, and you have double lows, and you come back into the middle of the range. So we're waiting for a reaction off of here. See if we see down on the lower time frame, looking for a 1 minute reversal. And who we got with us this morning? Dal. Dal is the first through the door this morning. Good morning, Dal. Adi, good morning. Yeah, we have a red folder at 10 o'clock. So think about this. We have this low forming here. We have this low forming here. 10 o'clock. Sweep this low, then come back and take out higher prices. Because I don't know if we've taken that. No, we haven't. You see, I'm going to put this right here on the 1 hour. See how we've reacted off the consequent encroachment of that 1 hour fair value gap or inversion. Come back, found support at it, push higher. Now, if we start charging through this and we're starting to run for these old highs, that's the objective I'm looking for up here. So here's the reversal. We close above this. Which we do. You want to see it come back down into that now. You want to see it pop into here. Now I want to see it. If it doesn't come back into here, which it didn't, look at this candle here. If it doesn't, it's just going to run straight to those highs. So you saw the reversal. the opportunity to get in there was not here. So you want to see this one here get taken to the upside, and then you want to see a reverse into here, 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 or back into here, stop. All we see is here. We're aiming for these equal highs above us. Good morning, Fernando. Russell, Abs, good morning, buddy. Tommy, good to see you, bud. Say J33, Tristan, good morning. Mr. Pips, good morning. Darren, Mr. Darren found some free time this morning. Excellent. Nice work, Tim. Pablo, good morning. What's up, man? Wondering if somebody knows why 1327 candle is so special. 1327 candle. I don't know why you mean 1327. I was reading some tweets yesterday about it, but they didn't explain. 1327 from yesterday? Yesterday's 1327 candle. Well, it's one of my numbers, but it's nothing special. It's one of the ones on my indicator, one of the times on my indicator, but it's I don't see anything specific in it. So we have a premium array, discount array. It ran straight up to the premium array and didn't give you an opportunity to get in. So I'd like to see it now go from the premium, now get back into this and see what we get from here, and then start running up here. They used it for turtle soup. Okay. Yeah, I saw the reversal there, or I saw the big wick there. If you catch that on the turtle soup, good for you. I don't see that one there, but I don't do turtle soups. I do chicken soups. We talked about that yesterday. Turtle soup is just knowing when to jump in, like right there. If you take a turtle soup off of that and run back for lower prices, that would be a turtle soup for me at 10 o'clock, taking this out and then running back in. But I'll do the chicken soup, which we affectionately called the chicken soup yesterday, which was the wait for the reversal to happen, come back into the reversal and catch that as the chicken soup after 10 o'clock. The turtle soup is before, which is so much more beautiful. But the chicken soup is reliable. In general, like a model, I guess it plays a role in the afternoon session. Yeah, it probably does. Hi, Darren. And all still on my travels, but thought I'd pop in and see if you're behaving yourselves. Miss you guys, hopefully back. Oh, Paul, well, enjoy your vacation, my friend. Enjoy your vacation. Don't rush back to the charts. I'm going to be getting out of the charts for the summer anyway, so yeah, we'll be getting back into that in August, September. Mid-August is when I like to come back in and have a good little poke around in there. So enjoy your vacation, man. Morning, Benjamin. I think we'll take out the equal lows on ES, making S&P, then NQ can jump. So what are we coming up for? 47. Let's see if it gives us the run on the highs now, or if it just gives us the rejection block again. That's the rejection block there. And the highs are taken. So my objective is looking right here. Where's my 930? Did you turtle soup that? That was turtle soup. If you like your soup hot, that was it right there. I'd be pulling my stop loss right up against break even right now. That was my turtle soup. I don't even see a chicken soup in here. So other than this, recapturing this one here, if you take out this low here on a close, which we did, come back inside it. So further downside, I'm looking for here now. Watch the mean threshold of that candle. That gives way. If it doesn't, then look for further downside. If it doesn't, if it starts pushing through this right here, wait for this on the close. That's the imbalance right there. You'll see it snap off that, keep coming back down now. I want to see this low get taken, otherwise it's going to push back through. If you see us revisiting this, then I'm going higher. Should be no reason to go back up there yet now. We never really had a chance to revisit this or this, so I think this is the objective for me, what you're going to reach for. Just keep your eyes on that level here now. Curry fish, good morning. Here's the order block we're looking for the first time. Now you've hit it. Nice clean reaction off that would be nice. Looking for your 50% of that range. Always kind of look at your tool, your fib tool here. Look at that 62% right on the money there. Now we can go higher. I'll be happy with that. I'll be fine with that. If we don't get that objective, always pull your fib tool on this. If you're in this to go short, if you turtle soup that, you should always be pulling your fib tool on that range. When you get to 50%, pay yourself, move to break even, 62%, move to 50, pay yourself here. Same thing here and here and here on the way down. If you use the fib tool, if the fib tool is your method, it's just one of the methods I showed to manage a trade, to scalp out using your fib setting. If you don't know the PD, if you're not really strong with your PD arrays, then you can use your fib tool to trade, to close your trade out in a scalable way on the way down. Because if you do get, if it's just retracing back down to an optimum trade entry to reverse, that is the best method I know to catch that run on the way down. Because when it snaps back and takes you out right away, you'll see that right there at 62%, you would have paid yourself there. At 50% would have came back, hit you, and look at it now. And you would have captured a turtle soup there for a run into perfect exit, a portion of your trade there. And again, it's easy to say after the fact, but I've showed you many times that fib tool idea. How's my British pound trade working out? Did it come back and take me out? I guess it did. Yeah, it was pretty tight. Yeah, it makes sense. It was pretty tight. It was definitely in an acceptable range for it to come back to. I just didn't want to see it come back there. I wanted to see it just roll over and go. But again, still downside objective. I still see that's possible here today. We can even run back into that breaker there and that imbalance on the 1 hour first before going lower. Let me put my, let's look over here. Come back up into the mean threshold of this candle. Nicely, perfect spot. This is way too high consolidation or high resistance to be playing in this right now. Finding support off the bottom of this daily fair value gap or this hourly fair value gap here. Upside objective still there for 10 o'clock. Well, that is 10 o'clock right now. News release. Come get you some. Objectives hit. Look at this little fair value gap right here. That's that little portion there you want to see on the 1 minute. Reach for that. Mohamedou, you're welcome, my friend. You're welcome anytime. You're welcome anytime. Well, I didn't see this, so I'm sitting here. We're looking for this return. We called this return back to here to go higher. That's the reversal. Order block that initiates a run. We don't get an opportunity to get on it. Real close there, didn't get it. Ran, took the highs out, came all the way back, then finally gave you the opportunity to get long there. Or called it, but didn't take it. So keep your eye on this level here. Welcome all the new people that's subscribed. Thank you for subscribing. We got 864 people now, which is it's a wonderful thing. It's a wonderful thing. Glad to have you all here. Oops. Here we go. We're hitting that fair value gap now. Now, whether how we act inside here is important. Bill. So we could be going higher still now. We're closed above it. I'd like to see this come back for your silver bullet entry in here. You're not getting a turtle. You're not getting a silver bullet right here right now. So we might have to wait for this wick to form on the hour, and then looking for a reversal. Keep your eye right here. Stop loss would go down here below this candle here. So your body breaks above it, would come back finding support at it now, pushing higher. I'd like to see it get down into here, just do a little bit of wick damage, come back and grab this fair value gap for a silver bullet entry long. It's in a real premium right now, so I don't even like that idea. But it has closed above the hourly fair value gap. I'm not taking this, but we'll see if this reversal at the hourly was what we were looking for, that reversal, for it to come back up into that hourly fair value gap, stop, and then continue back down. And I don't want to marry an idea here, so we're just going to stay in line with the way the market's running right now. Obviously, we're bullish. We come back into here, we're still bullish. And you just want to see a wick into here and then continue up. You want to see this stay above here. You don't want to see it close below it. Nice to see a few more people in the Telegram channel having a chat after hours, sharing their trades. Make these opportunities later. So we're obviously still going higher. This was the key runner today. This would have got you almost 100 handles here already. Looking for more upside now. Let's look for low here, order block, body, mean threshold. If we get a run back up inside here, see if we find any support here for rollover. If not, still could keep pushing higher back into that range. Yes, I saw the inversion too, but it was not within the macro time, so not within my rules to take it. Ooh, good. I like it. You like the macro. Only in your macro time. Well, this one was in your macro time. There's your macro starts here at 950. It reverses back into the opportunity. So it's a perfect time inside that macro to take a long. Curry, you see that? There's your reversal. So if it's not inside your macro yet, you wait for 950. There's 945. Doesn't quite hit your objective. 948. 50's here. We just took that high out. So a nice little reversal back into here is your opportunity to go long. All the way up to 1010. And 1010 puts you right there. That's 1011. So 1010 would put you right there. So you would have caught that whole thing in your macro. Do you see that? Hope that makes sense. Unless you have a different macro. That's possible. People have their own. I was waiting for the retest of the, oh, you wanted it to come down into here. I gotcha. But always remember, if you get one that trades through this, yes, this is the reversal, but if you get a body that trades through it and you don't get an opportunity to get that on the next candle, and the next candle trades through your next objective, which is this order block here, the candle that initiates the run down to make the fair value gap. As soon as it takes that high out, that's the one you want to see it return back into, provided we're not more than 50% of that range already. It almost gave you an opportunity to get in there. It wasn't till your macro starts here that you get that opportunity off that candle. Now you can choose the high, the close, or the mean threshold of this candle with the stop loss sitting down here. Or you can wait for 1, 2, 3 entries down here. There's 3 different levels. So you have 6 different potential entries here for a long. If you say during my macro, if it hits any one of these 6 entries, and you could feather in your entry, like you could be if you maximum you could put on was 0.5, let's say, you put 0.1, 0.1, 0.1, 0.1, and the best one would be right there. Because if you trade below it, they usually come back and tap it before you go lower. And that's the ideal fail-safe that I look for. At 10 o'clock. Thank you. Gave us a nice entry there at the first fair value gap after the market maker sell. But the red candle news, yeah. That's always the scary thing is, oh, there's news coming, so wait for the news release. So if you're into the macro only and say, the news, I'm expecting the news to propel me forward, then you better have a nice, that's got to be your narrative for expecting the news to give you rocket fuel for your objective. That's pretty confident. That's micro level thinking. Yeah, see, no, I like that. I like the fact that you guys are developing a set of rules that say, if this doesn't meet my set of rules, I am not entering, which is great. I'm not here to discount your rules. And I'm Curry, please don't think that I'm attacking your entry or not entry. I'm not at all. I love the fact that you're following a set of rules. And if you didn't take that entry, I have no problem with that. I think that's awesome that you follow those rules. And the same with you, Benjamin. If you're sticking with a set of rules and say it did not meet my parameters, that's discipline. That's what I like to hear. I'd rather hear someone tell me that than just wildly chasing after a trade. Here's a reversal. See this right here? Takes this candle out here on the downside with the body, trades back into it. Now we're expecting it to go shorter. I'm running with that. I got this short here. Pull your fib tool inside here. If you did catch that short, 50%, 62%, it took me out right there at 50. It's probably got more downside to go yet. Looking for this down here now. Keep your eye on this level right here. Watch it reacting off of here. You're inside this range here. So you got this one. You close above that one, then you're going higher. ideally you want this one to provide a level of support now. %70 optimal trade entries here, and 75 is a fill. See how those two are sitting right on that with the breaker that takes out this low and this low. Back inside that reversal again. So we're above here, closed above here, we're inside that range now. Now you're running in this, so that was the line in the sand. Bodies are still staying below it. Wicks did the damage. All the way back up into the breaker. Get this out of the way. So you don't see it revisit this again. If it revisits that, then you're looking for higher prices. You see it close below here now. Very well explained, thanks. Market structure shift. So the bodies are still respecting this inversion here. Wicks did some damage. Now you want to see this thing really start to give up the ghost now, start to peel through here. The fact that we keep chewing through this here, not a good sign. Looking for higher prices now. Till we closed above it, come back, found support at it. Now you're to go long. You're looking for higher prices now. Off this order block here. So you see how we started? We're stuck between this one and this one inside that range. As soon as we start trading above this, as soon as we closed above it, the reversal right there, closed above it, come back. That's your continuation on the upside. Took the highs. Now you want to see it come back, find some support in here and continue pushing higher. Found some support at it now. Trade back through it. Again, you're back into a bearish idea. Now that you've taken that high out, looking for these lows again. See how we're kind of bouncing back and forth between this one. Run above it, come back, found support at it. We trade through it again on the downside. Then you're back inside this range again. See how we traded below it right there? Give you an opportunity to get you out of your trade if you're short or you're long there. You're back to the mean threshold of this candle here. So this is your line in the sand for bulls. You want to see that hold. And ideally, you want to see this fair value gap here. So if that's your wiggle room, that's it. No further than that. If it comes back and revisits this, it's coming back down. So you need to get through this candle here now. Start eating through here. You can push it higher. Say closed right on it, closed below it, closed on it, opened, tapped, and away you go. It's a key level right here. Morning, Derek. Yeah, I caught some nice little runs this morning. I'm kind of working. I was thinking we could get back to a reversal and back down into this level here, but we're just not breaking this low. So we have a market structure shift here. And we've just come back inside that range. Found support off this. We've kind of ran through it a bit to the mean threshold. So bullish now until we break this low. They do bite better early in the morning. I have a hard time trusting this move up with the dollar also climbing. Something needs to give. Yeah, I still like this area down here and these relative equal lows overall. But right now I still have to say this is bullish. all the time we've got support off this fair value gap here. I'm still bullish inside the 1 minute chart, just a 1 minute chart. I'm still bullish. So until this gets taken on the downside and we take this out here, I have to still go bullish. Now there might be in a higher time frame objective. You're saying, well, look, we've already hit a higher time frame objective, so I'm anticipating reversal anytime. Then that's fine. Just make sure you look for it in here. You should see the reversal happening in here before obviously the higher time frames. Because the next objective above us is right here. That's the daily. Oh no, it's not inversion. That's the next upside objective. See how we've just hit the edge of it already? Oh, sorry, it's not. We're just finishing off the fair value gap. Sorry, this isn't a fair value yet. We just have that last little piece of this rebalance to go. Back to this candle here. We're just above us here. Now it's still pretty choppy in here. See the side get taken on the downside. Watch this candle here for closes. The next 15 seconds. Oh, my painter. Come in. Pretty good, thanks. How are you? Excellent.
We bring the paper up there.
What's that?
And bring it outside.
What's that?
I will bring the paper to the deck.
Oh, okay.
We can bring it outside.
Sure.
Upstairs.
Just let me know when you're ready. I'll help you take it out. Smashed my knee. Ouch. So high resistance, not a fun environment to be in, right? See how we've traded below it? Now watch this level. They're overlapping here. So this one here is now traded below here. You're back inside this. So bearish. Bearish now. Now I want to see breaking structure through here, get through this candle on the downside, get below this fair value gap. because you know I'm not really bearish until this whole range here is taken out. If we get below here, then I'm back to bearish again. Like overall bearish. Right now, just inside this range, you're stuck inside here. Mean threshold again of this candle. And we wait and see. We just watch it. It's just a watch and see game right now because it's just high resistance. You don't want to be playing in this. If that's the upside daily rebalance of that candle, then I'd like to see a reversal come up off of there, not just come down here. Higher objectives is the daily rebalancing of that yesterday's candle. You see that? We're just coming back up to rebalance off of Friday's low. So that's what we're coming down into. We're coming up into. Overall bearish equals grizzly bearish. Yeah. We've broken through this again on the downside. We've come back inside it, finding support. Remember, we found support go up. Now finding support to go low. It's really a key level inside this range here. And there's nothing else really in here to play off of. Down in here, maybe. I like that level right there. See this here? Draw all the way through these candles. This is taking this low reversal. You come back through, bodies drop below. This is where it starts to scramble you down below, trades above. Takes out the high, objective already hit. Come back down, find support right inside it again, right here. You run back up, inside the mean threshold of this candle. You run back down, you're inside it again. You trade below it this time, come back up. Now you're inside this guy. This guy goes shorter. This one goes higher. So you're kind of bouncing around between the two. That's why you're getting higher, lower, lower. So now you want to see it get above here again to go higher. So you can see when they start to overlap, you can throw yourself into this huge tizzy in these high consolidation or high resistance liquidity runs. Still trying to make sense of it, but it's definitely high resistance for sure. So wait for something clean to set up. You've got your macro starting in 2 minutes. Somewhat bearish is panda bearish. Yeah, we've got chicken soup now. We've got grizzly bearish and panda bearish. New ICT lingo. We have to get father to approve. Here's your macro about to begin. I have a 1 minute warning for the macro. So trading up into it, didn't get above it. We're still below it. Trade back into it. Now you want to see it get below this one. Find some support in here. Macro begins in 7 seconds. Now, what in here is even remotely playable? Nothing. So high resistance. Yes, we need Michael to come in and give it a blessing. The lingo blessing. Here's your 1050 macro. We've seen this work inside this range here now. I'm just looking up here and I'm thinking we have ran premium, discount, premium, discount, premium. We'll keep working this back and forth in that premium range, discount range. So we finally ran up into it. See how we're going above, below, above, below, above, below, above, below. We're compressing here. So now you expect to see this really start dipping down into these discount arrays now, because we've worked the upper portion of this premium and discount. Waiting. See it, want to see this still continue to roll over here, come back down. Excellent. See it, take these lows and use this candle here as support. It's a mitigation block, so it's not a super strong candle. Last down close candle that does not take out these old highs. Makes this a mitigation block. So you'd like to see it mitigate off of here. Let's go to trade below it first though. Made a good question here on Dow Jones. Well, so far we're hitting objectives. Man, that hit it perfectly there. 1 o'clock in the morning. We're looking for this run down into here now. Now the question was, Dow is in a 4-hour bearish fair value gap at a deep discount, about a 1 hour, 15-minute time frame, which enters today's range. So you have a reversal here. Body trades below it, comes back way back up inside it here. Body's respecting that. Stop would have to be way up here on the hourly. You break that candle, you come back inside it. New fair value gap, break it on the downside right here. Trade back up inside it to the mean consequent encroachment. No, you didn't quite get that. You didn't quite get that. But you've had one opportunity here. So you have 1, 2, 3 entries here. Take that low on a close here, trade back up into it here. Continuation on the downside, takes out that low. You want to see this close below here and then start running back up into this, find support to continue going lower and digging into this discount array here. So I would be anywhere inside this area is my downside objective for Dow Jones on the hourly. If you're trading on an hourly basis, that's ideally where you might be looking. On 1 minute, you see this reversal here. You take these highs out, that reversal, body trades below it right here. You trade back up inside it right here. Perfect entry for a short. You're aiming for a low. You take the low. You just wick below it. You wait. It takes it with another full body candle. You don't get a chance to get on it until it comes back all the way up inside here, which is this breaker again. See how the bodies respect this? It doesn't trade above it. So it doesn't get above your breaker. That would be a break in structure with a change in direction, running back up into that range again. You have a breaker, you run down, you take the breaker out on the downside. If you come back up inside that breaker, you don't want to see this high get taken here. And then you want to see this continuation on the downside now that we've taken this out. So these are the kind of things you look for right at those optimum times of the day, low-hanging fruit time, right? See, now British pound finally gave me that little run down. See that? We're looking for a run back into here. So I would have got it, but I had my stop loss really super tight. What I wanted, it didn't give me. So fair enough. Fill of the fair value gap did not even come back to rebalance. So where I initially had the stop loss sitting up here, had I left it there, we'd be in profit. A typical problem that I run into with my stop losses. I get overly aggressive with my stop loss. Let's look at the S&P. S&P is right back into the discount array. Right into here. Nice reaction off of that. Now you want to see that climb above here. Get some support and start running up for these highs now. It's super choppy. So if I was looking for support, I'd want to see it stay above this level right here. It's got to stay above this line. we have this low taken out here, these lows, reversal. You want to see this provide support now? What's this piece in here? Let's delete that. Here's your reversal here. Keep your eye on this candle here. So you're looking for a return back into this fair value gap. Find some support at it. You're bullish now because you've broken this. We have a change in direction. We break this to the top side. You have a break in structure. Breaker that takes out these lows. You want to see it come back, find some support inside this, and that closes in the next 5 seconds. One, good. Now you want to see that come back, tap this right inside here to here, and then start running for the highs. Like that. Stop loss is going to go down here below this guy. I have to put it below here. So now we're looking for these old highs here. Because I'm in a premium. I want to see this provide support here. Doesn't comes back and finds some more support in here again. I'm all right with that too. Inside that fair value gap, broke above it. Come back, find support inside here. Go higher. Nibble some profits out of there. See it take out that high and go, I don't want to see it come back into that level. Now you're looking at, every time I see these little reversals here, after taking the high, I like to pull the stop loss up nice and tight. Just because if it reverses on me here, that's when it's most likely to create the new reversal. So you want to see this, see where it trades on the next 20 seconds. If it trades below that, then we've got a new reversal back the other way. So I like to suck those stop losses up real tight in situations like, okay, you've just taken that high and I've only got, I guess in 6 lots, I could have taken off partials there, but I just take the whole lot and slam it up tight and you still get some profits. So now we've traded right below it there. So I'd be looking for a short right there. You gotta be careful though. You just gotta get below here. I don't want to see a stop loss get back up in here. This is the potential bear trap you can get caught in. If it starts to trade above this, I'm on the wrong side of this. So it's ideally got to get below here for me to get a little more excited about that. You want to see it break this structure right here with this candle. Find some support at that. Otherwise, you know, you can get caught in this bear trap here. We've had 3 different attempts to get down lower. That's it. I don't even want to see that start to run up above that. Snap off of that now. For me, I don't want to see that revisit that again now. If that revisits it, I'm on the wrong side. See what I mean? They shouldn't have to revisit. Once it's coming back into this again, they should have just tapped that and kept going. If it doesn't, then I'm on the wrong side. So pull the stop down even tighter. Now we're looking for this high here. Yeah, I'd like to see this 11 o'clock pull back into the range here. So look for this objective to get hit first on that daily. That fair value gap, well, not fair value gap, that rebalance to occur, and then look for a reversal. Hello to Milo. That's the objective hit there. We'll see what kind of reaction we get here. I haven't seen you around for a while, Cherish. Welcome back. I haven't seen you for months. Welcome back. Sometimes it's good to take a break, hey? Good for you. So more upside, obviously, now. We've broken through that rebalance on the daily. And now we're just looking for upside liquidity. So where is your next objective for? Let's go with this immediate one, which is right here first. This one, and then you've got this one. Just look for this upside objective here now. Looking right in here. Keep your eyes here. I'm chasing my stop loss up here for sure. I'm just bumping my stop loss up behind the previous candle's low because I'm in profit and I don't want to lose that now. That's me out. I just caught this run up here and I'm just kind of bumping up. If you see these candles, they don't take out the previous candle's low behind it. And then when it does, that's when I'm out. Now I'm looking for this reversal here. E-man, good job. I think we still got this little bit more juice in the lemon up to here. I tell you, it would have been a beautiful run this morning off of this guy here. We were calling this one. It would have been 815. That would have been 115, 113 handles right now. But you'd have to trust that this was going to hold. You'd have to have weathered all that and said, oh, it's okay. I still think it's going higher. Entries off the top here, off this order block. As soon as you see this start breaking this high, come back, found some support here inside the fair value gap to go higher. See how it just comes back to taps these old highs here. You see that, Hadi? As soon as you have a body trade above old highs, if you can come back and retap those old highs, you can get long there. But again, remember, keep an idea that what part of the day you in, what time are you in. Sometimes it's just other people look at that and say, oh, turtle soup. When the body breaks the high, it's not just a wick, but when the body breaks the high, then I'm more apt to go long, especially if time still supports and you've got an objective on a higher time frame that supports higher prices. Then chances are it's a better bet to take. And your stop loss would have to go down in here in case if you're wrong. This is the reversal. If it trades below it, this is the guy you got to worry about trading below. Remember that bear trap I was telling you about right there, where if you see it trade below and it trades below it here, but it doesn't take out this candle, here's the potential bear trap when you've got a higher time frame objective. This catches people thinking, okay, we're going to change direction. Nope. Take this out, break market structure with a change in direction above an old high, then yeah, I'm a little more keen on that idea. But we didn't see how the bodies were almost respecting that opening or that close there, or the high of this candle and the fair value gap low. Wicks came down inside the candles, the mean threshold. That's your wiggle room. You want to see it really get a body starting to close below here. Come back into this breaker and find support. It didn't. Breaker held and then went higher. Watch here. Again, we still haven't hit this guy here yet, and we don't have one of those little breakers to catch us, right? If we fall. We've got this here, and this breaker, you want to see it drop below the breaker, find some support at it, and continue down. We don't have that option here. You just have the reversal back into this range. So you're looking for a body to drop below here, come back up in this consolidation that just happened right here for a CAM model 1 entry for a short. Stop loss is right tight. Keeping in mind that higher time frame objective is still not hit yet. So you want to see a distinctive body get through this. and watch the range that you're in, because you're pulling your fib tool from here to here and looking at the 50%, which will probably be in here somewhere. So we don't have a body through it yet. We just got wicks through it. Just wicks. So we wait for bodies. Yeah, that's the fair value gap here. There's the reversal here we're talking about. Body gets above it here. This candle. See how we were talking about this? When you have a fair value gap here and the candle takes it and the next one doesn't come back and revisit it, it just keeps climbing and takes out the candle that initiates this run. You want to see it as soon as it body trades above that, as soon as it gets back to it, that's what you want to trade for a long, to take out these highs here. And if you have a higher time frame objective, obviously that's what you're aiming for as well. So there's your opportunity. And if you're stacking from down here, you've come off of this one here. This situation here is the same one I just talked about right here. See how you got that fair value gap here? You trade above it, we don't come back to it. So you wait for this to trade above here and it closes above. So you wait for it to come back to it right here. In this case, on this chart, it actually hits it. So you could go long there. If not, you could wait for it to come back into it on this reversal to go long. Same situation, rinse and repeat here. We take out the lows, fair value gap, run through it. We're looking for it to retrace back into here so we can get long above these highs. And then it trades above the candle that initiates the run. We wait for it to trade back into it, which is what we were waiting for over here. It trades into it. Now you can get long. You get one more opportunity to get in on that before it finally runs higher. Now we're getting a body trade below here. So now you're looking for this just to come back in, tap this, because now you're short. And if you don't get an opportunity to get in on that, like you'd have with that order block here, you don't get one of those here until down here. And then that's way down in the range. So you're looking at big time discount. So you want to see it come back up in here, tap this. Stop loss would be above here or above the high. So you want to see it get right back up in here. And then pull your fib tool from here. Here, see, it's already hit 50% already. Sorry. So it hit it right there on the money, filled that fair value gap. So you didn't get an opportunity to get short there. So now the stop goes right here. So if I'm wrong, I'm wrong. And then I want to see it come back to 50% again. This could be the continuation here. All we need to do is come back to 50%. Usually you want to see it just dip below it, but it's just come back into the perfect entry here. So I don't want to see it start revisiting through this order block here. I'll just close that out if it starts. Because then I'm on the wrong side. See how this reversal here? I'm giving that the wiggle room for that. That's it. Nope. That's long. See how we've traded above this here on the reversal? So this is where you mess with a reversal going long, a reversal going short. You got the short to the 50%. That's acceptable, right? And now you've got this reversal here. Now you've taken out a little low, come back in, find support at this and go higher. And we still have that higher time frame objective we haven't hit yet. So I hope that makes sense. So you got to be kind of really quick to catch those when you're on the wrong side of it, right? So the bodies of the candles are still respecting this. But now we've got this one here. Even though these are weak swings, you want to see a decent swing get taken out. And now we've got a body above it. There you go. Now you're looking for higher. So change in direction, continuation, break in structure, continue going higher. I like along off this candle here. And again, if we trade below this candle here, I'm on the wrong side again. And we're in that consolidation that you can typically get beat up in. So now I'm looking for this guy here. That's my line in the sand for that one. This one here, you want to see it provide support, which is almost in line with this one here. So that came down inside this, find support, push higher. Get some legs, get up there now. Here now. Leave it down here. We still haven't visited it yet, but we do like this. This is going to provide a support. Yeah, I don't want to see it cut through this now. Because now we've reclaimed this breaker. Hit it multiple times now. You just want to see it get out of here. Get some legs and get out of there now. I don't want to take any losses anymore, so. I'm done. I don't want to nickel and dime this all the way up, so I'm just going to close. I'm just going to move to the side and watch it now. It's not running to as cleanly as I wanted to these levels, so. The potential is to run back down into here. And then you want to see if this holds price. So tap it. Now you want to see it go. Now we've got reversal. You didn't get an opportunity to get in, so you see this. Trades above it, you come back into it, go high, take out the highs. Reverse finally comes all the way down into a discount inside this smaller range here. See that? Right into 50%, just pop below it onto a discount array, right below the discount, right below the 50%, and then run up. That's what we're looking for. And I'm not playing in here anymore, so ideally that's still what we're looking for. And our upside objective is still sitting here. Mean threshold. Not taken yet, just wicks. Inside this range here now, got a little fair value gap here and here. I got nothing above us here. So really this is your line in the sand, is the discount array sitting right here. You trade below that, you're looking for lower. You want to see these wicks keep coming down here. You want that to continue to provide resistance. We close below here again, keep your eye on this guy right here. It's the only one, the only fair value gap provides you some support here. There's an imbalance right here, a little busy. We haven't taken out a high with it though. So for me, if I'm looking for my ideal thing, you'd want to see this hit the objective we're looking for, create this fair value gap up in here, get this reversal, take out this candle, come back, find support at it, and then continue going lower. So you want to see one more push up into this range here first. We're getting these wicks, we're meeting resistance, trying to push down, and we're getting rejected off that support inversion here. That's why I say if you lose it on the downside, mean threshold, bold candle, come back, a little bit of support, then I'm aiming for a deeper run into this range. So far, we're getting the support we're looking for. See how we've taken out this little low right here? You got this little fair value gap here. You want to see it trade back through that on a close and then get through that candle. And we're doing the same thing we've been talking about. Run through, go higher, come back, find support at it, go higher. Here, run through this, run through that, come back, find support, go higher. Here, run through this, come back, find support, or off here to go higher to fill that. That's what we're looking for. So look for your setup as it's forming and say, that's what I want to see. And if it starts to happen exactly the way you see it, then you have a potential entry. Then keep track of the time of day that you're in and whether or not this is worth a trade. We're coming up for lunch hour here now. So it would be nice to see lunch take out this high at lunch, get us a reversal back into the range and start pulling back down or lower. And for me to get really bearish, I'd have to be below here automatically anyway. For that breaker to get taken out, this breaker here, it takes out this high. You want to see that get eaten right through, and then you find some support at it to continue going lower. So far, you've got this change in direction. It came back right on it there. Continuation. Trade below here. You came back inside it here. So you're really between this candle here, that change in direction, back inside this reversal here. So I'm just, you did is just change direction here inside this range, and we're coming back into a discount range portion of that again. So look from here to here. Look at the retracement. There's 50%. We keep dipping down into the discount array here. So you change direction inside internal range liquidity. Keeps bouncing off 62%. Not grizzly bearish right now. That's just a panda bear rolling around from top to bottom inside that small range. That's what I see, Derek. I don't see anything else going on here right now other than just internal range liquidity in the small range. I want to see it bounce off there and start clearing out those highs and start hitting our objective right at lunchtime. The next 15 minutes, it can flop around here. And then at 12 o'clock or just before 12, pop up, clear those highs out, hit that objective, and give us a clean reversal. A clean reversal setup. That's what I'm looking for. Then I'm looking for a grizzly bear. And ideally, I'd like to see it happen on this high get taken out on a 2 or 7 minute candle. How's that for a late prediction? I'll see if that gets to the objective I'm looking for. $11.27. Yeah, agreed. It's got to take that low out. It's got to take this breaker out right here. This 3 candle breaker. So I'm looking for something like this. But you can go here, here, here. Here, here. These are what I want to see. Derek, please. I'd like to see this. Thank you very much. And then continue down from there. And then who knows? You show me this little path tool. Now I love it. Won't be more like something like this. See what we get for lunchtime, and then I'm out. It's a gorgeous day out there, so I want to get out there and do some walking. If we hit the volume imbalance, consequent encroachment, I'm out of the bullish move for now. If we hit the consequent encroachment of the volume imbalance, I think this is already showing us that we want to go higher. Keeps probing us higher here through this. So I think it wants to go higher, come back, find some support, and go higher. I think that should find support right around there. That gets up in here. I still have one on to that point. Oh, okay. You still got one bullish one on there? That's me too. So my wife washed the car for her. I created a monster with the drawing tool. Told my wife I washed the car today. Wow, look at you, all super sweet, washing the car. I gotta try and hang our TV now. We had this fancy guy come in and do some cool technique. He's like a Picasso up here in Canada. He's like he's the guy you go to if you want a fancy paint job done on your walls. He's the guy to do it. He's not just the guy that comes in and rolls your walls, though he will do that. He hates it, but he does more of the fancier style, different techniques on your walls and that. So he came in and did our fireplace because we just had a flat black wall, and he came in and did this real cool texture technique on it, which is really nice. And now I finally get to put my TV up there. Oh, the daily volume imbalance. Okay. So I'm going to keep stretching this out. Marching along with its little crippled legs. There you go. There's the higher one. Okay, run for the, what time is it? 54. Oh, it ran through my little spot that I wanted. Okay, come and get our objective now. We can just do this one now then. Walk. Right there. Objective satisfied. Now I want to see is the, let me get rid of all this crap here. Now I want to see a reversal happening here. Out at 50 with all mine. Okay. Good for you, buddy. Tried a turtle soup right here. I've never done turtle soups, so I'm trying it right off this fair value gap here. And my stop is sitting like right there. That's me. I'm out. Oh no, I'm still in. Don't take me out. I didn't give it an opportunity. It came back to break even and I got out. The fact that it came back up through this candle again, I was like, I'm out anyway. I thought it'd take me out, but it didn't. So as soon as it came back to break even, I got out. That's going higher. See, get below this candle here now. I want to see it really clean this out now that we've taken this. I keep trying to marry the idea that we're going to go shorter, but all the time you see this supporting prices higher, you got to keep saying we're going higher. Two more minutes. Clock. On the 4 hour, you said? Now I want to see a fair value gap form here. Otherwise, we're still pushing higher. Those get taken out now. It's interesting though that at lunchtime it did decide to take out the lows before highs, but a mirror to the left makes me think. This is the 12 o'clock. Take the lows, silver bullet, short. That's it for me, folks. I think I'm out of here now. I'm looking for a little short inside this range here. Get my stop loss off. I don't want to see it come back and revisit this here. So, and there it does. It comes back and revisits it. That's what I don't want it to do, and it comes right back there. I guess you got that whole fair value. Yeah, you can come into. Consequent encroachment. Anyway, so if it takes out the this fair value gap here to the upside, then I'm out. I'm just trading this with a demo account. So it's a lunch hour. Be real careful with your trades now. I think I'm going to be heading for the open walkways. Go out there and enjoy some sunshine. Give yourself a chance to enjoy your day, folks. Hope you have a great day. I will see you bright and early tomorrow at 9 o'clock on a Wednesday, and we'll see what kind of price action we get. Stay safe out there and take care of each other. I will see you guys tomorrow.